Traders, Craig here with a market update. Okay, so we are now less than 1 week away from the US presidential elections. This is a huge risk event for the markets. Okay, so in polling at the moment, it seems as if most polls show that Trump's in the lead. However, what is meaningful is what is happening in the actual betting markets. So in the US, they can bet on the presidential election via Polymarket. And Polymarket has taken almost $2.5 billion worth of bets, and most of those bets are going on Trump to win. So on Polymarket, it's actually got Trump as a short price favourite to win the election. So look, financial markets have taken notice of the polls and the betting markets, and Trump trades now are starting to work quite well in the market. So let's have a look at some of those. Okay, so Bitcoin. Trump is very pro-Bitcoin. He wants to make Bitcoin, the US, the center of the universe for Bitcoin. And so we've seen a very good rally in Bitcoin. Last night it actually went through 70,000, and we've traded up as high as 73,000, so it smashed through that. It also technically looks like it's broken out of a bull flag technical pattern, which is bullish. No doubt, look, we will be making record highs in Bitcoin shortly. Now traders are targeting in the short term up towards 80,000 for Bitcoin, but Bitcoin have been looking at 100,000 targets for a very long time. Could it be Trump winning the election that finally gets Bitcoin up to 100,000? I personally never thought it was possible for Bitcoin to do it, but the way Bitcoin trades, look, anything is possible. Further on with that though is that look, Trump needs to win the election though, because if he doesn't, there's going to be a lot of disappointment in the Bitcoin market. Okay, so now one of Trump's main policies obviously is tariffs, and they are seen as inflationary. So that is one of the reasons that we have seen this huge spike up in US bond yields, where we've got US 2-year yields back up at trading at 4.1% and above, and US 10-year yields almost hit 4.3% in the last day, and trading at the moment around about 4.25%. This huge spike in US bond yields is what has driven also the big spike that we've seen in the last month, and especially in the last couple of weeks, in the US dollar. So US dollar index spiked from the lows of 100 back above 104, targeting 105 now. So certainly, look, if you have been selling US dollars, you've been on the wrong side of this this freight train that at the moment has just been one-way street. No doubt, look, if Trump does win the election, we will see a further spike in bond yields, and no doubt a further spike in the US dollar as well. Now, the two currency pairs that will probably do the best with Trump winning the election, the first one is dollar yen. The Bank of Japan still has a policy rate of 0.25%. So it is the most sensitive currency to higher bond yields, US bond yields. So it will hate US bond yields going up. So we'll see dollar yen continue the rally that it has at the moment, and obviously the Japanese and the Bank of Japan will have a problem to deal with after the US election. The other currency pair that will do exceptionally well is dollar China. Now, the tariffs that Trump's going to impose, obviously the biggest tariffs are going to be centered on China, and he's going to start another trade war with China. The Chinese will obviously let their currency depreciate to help pay for the tariffs. So dollar China, dollar CNY, no doubt will be trading a lot higher on a Trump victory. So if you believe in a Trump win, that's the two currency pairs that you want to be long of, dollar yen and dollar China. Okay, well, equity markets, look, they're obviously going to cheer a Trump victory. Look, in his first term, Trump was obviously, he was very proud every time the Dow and US equity markets made record highs. He tweeted about that. He's obviously always been very pro US equity markets. At the moment, I don't think that you can be selling US equity markets going into this election. Okay, so moving along today, Wednesday is a big data day. Locally here, we talked about it on Monday, is that we have third quarter CPI in Australia. Now, look, the next decision for the RBA has been very uncertain exactly what they're going to do. Now, the third quarter CPI, what we need to focus on and what the RBA will be focused on is the RBA trim mean. Now, so year on year, that trim mean is supposed to fall from 3.9% from the previous quarter down to 3.5%. And then the market will also be focused on the quarter on quarter trimmed mean, and that's supposed to rise by 0.8%. So I would suggest that the numbers need to come in below expectations if the market is going to start pricing in that the RBA will join all the other global CBs and start cutting rates. It won't happen this year though, and January we don't have an RBA meeting, so the earliest that potentially that could happen is February next year. Having said that though, if the numbers actually come in above expectations, well, then all bets off, right? There's no chance of any RBA cut even in February next year, and potentially the market may even start thinking that the RBA still might have a hike left in them. So yes, very important number today. Obviously, it's going to affect trading in the Aussie. Aussie has obviously sold off very aggressively on the back of the stronger US dollar. And we've got it trading down towards 65.5 cents at the moment. Look, a weaker number, there's a chance obviously we might go down towards 65 cents. But certainly the Aussie, to regain any sort of footing at the moment, it's going to need a stronger number to get back above 66 cents. ASX, look, it's going to love a weaker number. Would love rate cuts, and if that happen, obviously it's going to rally. We'll go back target record highs, but a number that comes above expectations, look, ASX will be weighed down by that. Okay, so moving along, also in the US, big data day, in that we've got third quarter GDP in the US. That's expected to come out at 3%. 3% is a solid number. That certainly is not an economy that is going into any sort of imminent recession. We know that the US has had a lot of strong numbers out recently. The risk is that this could be also a stronger number than the market expects. If it is a stronger number than the market expects, well then we can expect another rise in US bond yields, and obviously the US dollar will follow that. So if you're trading currencies, you've got to be focused on what's going on tonight with this GDP print. There's also a school of thought out there at the moment that if we continue to get this stronger US data, that potentially the Fed may actually pause on cutting rates. So if that chorus got stronger, no doubt that'll start impacting markets as well. So watch out for any other sort of headlines that start talking like this. Lastly, one of the other markets that's moving is gold. Another new record high last night. Look, the geopolitical tensions, we thought that on the weekend that we might have seen a de-escalation after the Israel's retaliation to Iran was nowhere near as bad as feared, and Iran did not respond initially, but we're getting some headlines overnight saying that the Iran Revolutionary Guard said that they would surprise Israel with something that they've never seen before. So look, there is still some uncertainty with this geopolitical tensions. We don't know exactly what Iran is going to do next and whether or not they will retaliate. So yes, gold is still trading, higher on the fact that these tensions still exist. Look, the next topside target for gold is 2,800. Obviously, that's close to market. That's only about $25 away. And it's been very impressive that gold has so far ignored the sharp rise in bond yields and sharp rise in US dollar, which under normal circumstances would weigh heavily on gold. So what gold is actually doing at the moment is super impressive in that light, and obviously making new record highs again. It can only be classified one way, that it is bullish. Anyway, look, good luck with your trades today, and we'll check back in soon.